Imagine waking up to headlines that could reshape an entire nation's economic future. Japan's stock market soaring like a rocket after electing its first female prime minister, who happens to be a staunch conservative. It's a moment that's got investors buzzing and critics questioning, is this the dawn of bold change, or just another chapter in political drama? Stick around, because this story dives deep into the markets. Wild ride and the controversies brewing beneath the surface. On Monday, Japan's Nikkei stock index, which tracks the performance of the country's top companies, surged by nearly 5%, while the Japanese yen lost some of its strength against the US dollar. This excitement kicked off right after the ruling Liberal Democratic Party, LDP, selected Sanae Takaichi as its new leader. Takaichi, a 64-year-old politician, is poised to become Japan's first woman prime minister, thanks to the LDP's strong presence in the lower house of parliament, even though they don't hold a full majority. With opposition parties divided, her path to the top job looks clear. But here's where it gets controversial. Takaichi is no moderate. She's an ultra-conservative ally of the late Prime Minister Shinzo Abe, admiring figures like former British leader Margaret Thatcher for her tough economic stances. Many expect her to push forward Abe's vision, which includes policies friendly to businesses and markets. For beginners, think of this as a focus on deregulation and growth strategies that could make it easier for companies to thrive, potentially lifting the economy. Yet this raises eyebrows. Some praise it as a needed jolt, while others worry it might deepen social divides or ignore pressing issues like inequality. Other Asian markets joined the upbeat mood, mostly climbing higher, and even U.S. futures ticked up. Oil prices also rose by about $1 per barrel, adding to the global energy buzz. Investors, particularly those from outside Japan, seemed thrilled with Takaichi's selection. Neil Newman, a strategy expert at Astris Advisory Japan, noted that the market moves appeared driven largely by foreign buyers, who are betting on her pro-business approach. Obviously, investors like what she has been saying, Newman explained, pointing to the stocks that jumped, like those in the automotive sector. Speaking of which, automakers got a special boost from an unconfirmed rumor that U.S. President Donald Trump might ease tariffs on auto parts and materials for American manufacturers. Toyota Motor Corp's shares leaped 4.9% in Tokyo, and Honda Motor Co. gained 4.7%. By mid-afternoon, the Nikkei 225 index had climbed 4.7%, to 47,924.52 points. In contrast, Hong Kong's Hang Seng Index dipped 0.6% to 26,976.37, and Australia's SP/ASX 200 edged down 0.1% to 8,976.70. Markets in mainland China, Taiwan, and South Korea were shut for holidays, so no updates there. The yen's decline against the dollar, rising to 150.31 yen from 149.33, stems from expectations that Takaichi will ramp up government spending, which could fuel inflation. For those new to this, inflation means prices rising, and a weaker yen makes Japanese goods cheaper abroad, but imports more expensive at home. The euro also slipped slightly to $1.1723 from $1.1730. And this is the part most people miss. While Monday's action was in Asia, the U.S. markets had their own story the previous Friday. Most stocks inched higher, setting new records. The S&P 500, a broad measure of U.S. stock performance, rose just under 0.1% to 6,715.79. marking its seventh winning week in 9. The Dow Jones Industrial Average, focusing on big companies, jumped 0.5% to 46,758.28, both hitting fresh highs. The Nasdaq, heavy on tech stocks, started strong, but ended down 0.3% to 22,780.51 from its record. Normally, the first Friday of the month draws Wall Street's gaze to the government's jobs report, which reveals how many jobs were added or lost and updates the unemployment rate. But a U.S. government shutdown, now in its third day, delayed this crucial data. This report is especially vital now, as markets are banking on a cooling job market to prompt the Federal Reserve to keep lowering interest rates. Think of it as the central bank making borrowing cheaper to stimulate the economy. Historically, government shutdowns haven't devastated the economy or stocks much, and experts believe this one might follow suit, despite President Trump's threats of mass firings for federal workers. Early reports on U.S. action, business activity were mixed. One from the Institute for Supply Management suggested growth is slowing, while another from SP Global indicated it's still creeping along in sectors like healthcare, real estate, and services. In other news from early Monday, U.S. benchmark crude oil prices increased by 99 cents to $61.87 per barrel, and Brent crude, the global benchmark, added the same amount to $65.52. This uptick came after OPEC+, a group of oil-producing nations including major players like Saudi Arabia and Russia, agreed over the weekend to a modest increase in production. They cited a stable world economy and decided to boost output by 137,000 barrels per day in November, the same as in October. This move, part of a series of small hikes throughout the year, follows earlier cuts in 2023 and 2024. Aiming to balance supply and avoid flooding the market, Takaichi isn't stepping into an easy role, though. As Fitch Solutions pointed out, she'll grapple with boosting Japan's economic edge, fortifying its tech and industrial sectors, and tackling an aging population with fewer workers, all while managing a massive public debt load. For example, Japan's workforce is shrinking due to low birth rates, which could strain innovation and growth. Imagine fewer young engineers to drive the next wave of robotics or electronics. So, what's your take? Do you see Takaichi's ultra-conservative policies as a game-changer for Japan's economy, potentially echoing Thatcher's legacy? Or do they risk alienating groups pushing for more progressive reforms? And with markets reacting so positively, is this genuine optimism or just short-term hype from foreign investors? Share your thoughts in the comments. Do you agree, disagree, or have a counterpoint to add to the debate?